with things starting to seemingly look a bit more bullish, I'm now starting to look for slightly riskier plays and things that I can invest in, which can generate greater returns. Welcome back to Bearman Crypto, where we talk all things crypto. So, in today's video, things are now starting to look a bit more bullish in the crypto markets, I guess. And at the moment, this could be the opportunity to start looking for slightly riskier plays. And again, obviously, with higher risk comes greater reward. And obviously, as I always say, not financial advice. So anything I talk about in this video, please make sure you do your own further research and don't just go and invest what I'm talking about. But what I'm looking at today, the project I'm specifically looking at is called Perpetual Protocol. So this is slightly in the similar realm to dYdX, GMX, but this is more of an ultra low cap project relative to those ones. Um, and really, the reason behind why I'm looking at this is when obviously we had the whole FTX fallout, there's a big gap that's been left in the market, specifically around trading. And you've now got dYdX, GMX, all those protocols starting to seemingly fill those gaps for people that are looking to trade in DeFi derivatives. And specifically, why I'm looking at this, I believe that this year in 2023, we're going to get another DeFi summer, and trading could be one of those areas where it could be a catalyst for a big return, specifically on DeFi. So, in terms of a perpetual protocol, just on CoinGecko here, so it's currently ranked 446 in terms of ranking. And at the moment, from a token perspective, you've got 66 million tokens in circulation and a maximum of 150 million. And, you know, this is one of the things that I think is definitely of interest relative to things like dYdX. It's got a relatively low supply, considerably lower supply. We can have a look at dYdX here. So in comparison, dYdX is ranked 91st and circulating supply is 148 million, which is already pretty much close to what you've got for Perpetual Protocol. And look, we've got a greater supply of tokens for dYdX. So one of the things that's quite appealing is the relatively low circulating supply on specifically on Perpetual Protocol. And specifically, if we're still having a look at the charts here on Perpetual Protocol, it's got an all-time high of $24. And relative to, if we have a look at the full time frame of how it's performed over its lifetime, so if we go back to 2021, it was not even 2020, it was as low as $1. So we're currently even way below 2020 prices. But in the peak of the bull run, when it really got going and this was generating a lot of interest, this is when it reached that peak of $24.40. Currently, we're about 35x from that point. So we got a considerable way to go. And my belief is once this market continues to pump, particularly in 2023, this token is going to push. And I think once volume starts going into DeFi and specifically trading, this I would expect will generate probably, I can see this specific token price going as high as $6, $7 in 2023 alone. So if you just have a look in terms of just the token itself, so there's various things that you can do with the token. At the moment, you can basically lock up your tokens, specifically in this program here, where you basically earn a proportion of the fees. So they've got what are called VE perps that they've basically introduced. So your money is basically held there. You lock it up for a period from a minimum of a week up to a year. and you can be earning a percentage of the fees, and some of the returns that you're getting are between 30 to 50% APY. So this is definitely going to be something that I'll be looking to do to see if I can actually generate myself a bit of passive income. We can have a quick look here in terms of basically it gives you weekly stats in terms of how much APY you can earn. So at the moment, this is just showing what it was last week. So this was at 22%, so slightly below what I mentioned earlier. But this will fluctuate obviously week on week. So again, the prospect of earning fees on trading. So if this trading, as it increases, your share of the revenue is gonna increase. And again, I'll remind you, low circulating supply of tokens. So the more tokens you buy currently at these low prices, obviously the bigger the share of that fee you're gonna get. But obviously, relative to things such as dYdX, this is not quite on the same level in terms of it's a lot more complex to provide liquidity. So at the moment, this is specifically targeting seasoned traders in terms of how they use this. But they've got new thing coming up at some stage, specifically called vaults. They had it on their website somewhere. Where they're going to basically introduce these vaults, which will make it a lot easier to basically provide liquidity. And that's going to be one of the things that once they change that mechanism, it will be highly appealing to a lot more investors. So this is what I'm doing. It's a bit of a DEGEN play, I would call it. But watch out for this, guys. This is definitely one that I believe is going to pump in this market. And one of the things to note as well, this is currently listed on Binance. So typically when something is listed on Binance, you tend to get quite good volume once it starts pumping. So this is one I'm watching, but I just wanted to share with you. Let me know what you think. Is this something that you would consider investing in? Let me know down in the comments section. But that's what I want to show you in this video, and I'll see you in the next one.